Doing an IPO in London. Leverage the advantages of the world's leading financial center. Presentation overview. Introduction to IPOs. IPO stands for Initial Public Offering. This section explains what an IPO is, why a company might choose to go public, and the benefits and drawbacks involved. Preparing for an IPO. This section explains the details of preparing for an IPO, including financial statements, corporate governance, and other regulatory requirements. IPO process in London. This section provides an overview of the IPO process in London, including selecting an investment bank, listing requirements, and pricing. Post-IPO obligations. This section highlights the post-IPO obligations that companies must meet, including reporting and investor relations. Introduction to IPOs. What is an IPO? An IPO is the process by which a company goes from being privately owned to publicly traded, offering shares of its stock to the general public for the first time. Benefits of going public. Going public can provide a range of benefits, from access to capital to increased visibility in the market. Companies that go public can raise significant funds to finance future growth and increase their visibility in the market, making it easier to attract talent and enter into strategic partnerships. Role of investment banks. Investment banks play a critical role in the IPO process, advising companies on structuring and pricing their offerings and helping to market the shares to investors. Types of securities. Companies can issue a range of securities when going public, including common stock, preferred stock, and debt securities. Each type of security has its own unique risks and benefits that companies must consider when structuring their offerings. What is an IPO? An initial public offering (IPO) is the first time that a company's shares are offered to the public. It is a complex process that involves a range of stakeholders, including the company's management, investment banks, and regulatory bodies. Why consider an IPO? Access to capital. Going public can provide companies with access to capital from a wide range of investors, enabling them to fund growth and expansion. Increased liquidity for shareholders. Going public can increase liquidity for shareholders, providing an opportunity to sell shares and realize gains. Enhanced visibility in the market. Going public can enhance a company's visibility in the market, attracting new customers, partners, and investors. Platform for future growth and expansion. Going public can provide a platform for future growth and expansion, enabling companies to fund new initiatives, investments, and acquisitions. Preparing for an IPO. Financial statements. Preparing financial statements is an essential part of preparing for an IPO. It involves gathering financial data and presenting it in a clear and concise manner to potential investors. Corporate governance. Establishing a strong corporate governance framework is crucial for a successful IPO. This involves setting up a board of directors, developing policies and procedures, and ensuring compliance with regulations. Market analysis. Conducting market analysis is important in preparing for an IPO. It involves analyzing the market trends, identifying potential competitors, and determining the company's unique selling proposition. Preparing financial statements. Audited financial statements are a key requirement for an IPO and provide investors with a clear picture of the company's financial health and performance, which is crucial for making informed investment decisions. Corporate governance and disclosure. Corporate governance. Corporate governance refers to the system of rules, practices, and processes by which a company is directed and controlled. Strong corporate governance is essential for companies that are going public and helps to maintain the trust of investors and stakeholders. Disclosure and transparency. Disclosure and transparency requirements are key components of strong corporate governance. Companies must provide accurate and timely information about their financial performance, operations, and other material events to investors and regulators. Role of Board of Directors. The Board of Directors play a critical role in setting and enforcing corporate governance policies. They are responsible for overseeing the company's management and ensuring that it is acting in the best interests of shareholders and stakeholders. The IPO process in London. Selecting an investment bank. Selecting an investment bank is a crucial step in the IPO process. The bank will help the company prepare the necessary documents, perform due diligence, and market the shares to potential investors. Regulatory requirements. The regulatory requirements for an IPO in London are set out by the Financial Conduct Authority, FCA, and the London Stock Exchange. The company must comply with the FCA's prospectus rules and the disclosure and transparency rules. Pricing and allocation. Pricing and allocation are critical steps in the IPO process. The company must decide on the offer price, which will determine the amount of capital raised and the valuation of the company. The shares must then be allocated to investors based on demand and other factors. Selecting an investment bank. Experience and reputation. Companies should consider the experience and reputation of an investment bank when selecting one. Banks with a strong track record of success can help increase the chances of a successful IPO. Industry expertise. Companies should choose an investment bank with expertise in their industry. Banks with industry expertise can provide valuable insights and guidance throughout the IPO process. Underwriting fees and services. Companies should consider the underwriting fees and services offered by investment banks before making a final decision. Banks with competitive fees and value added services can help reduce costs and improve the overall quality of the IPO. Listing requirements and procedures. Listing requirements. Companies must meet a range of listing requirements to go public in London. Key requirements include financial performance, shareholder structure, and corporate governance. Financial performance. Financial performance is a key requirement for companies seeking to go public in London. Requirements include minimum market capitalization, revenue and profitability. Shareholder structure. Shareholder structure is an important consideration for companies seeking to go public in London. Requirements include a minimum percentage of shares held by the public, as well as restrictions on insider trading. Regulatory approval process. The process for obtaining regulatory approval to go public in London is rigorous and complex. It involves multiple stages, including submission of a prospectus, review by the regulatory authority, and engagement with potential investors. Pricing and allocation. Factors determining share price. Several factors determine the price of shares during an IPO, including company valuation, market demand, and the number of shares offered. Understanding these factors is crucial to making informed investment decisions. Methods of share allocation. There are several methods used to allocate shares to investors during an IPO, including the Dutch auction, fixed price offering, and book building. Each method has its pros and cons, and understanding them is important for making informed investment decisions. Post-IPO obligations and considerations. Reporting requirements. Publicly traded companies are required to meet a range of reporting requirements, including quarterly and annual financial reports and disclosures of material events. Non-compliance can result in penalties or legal action. Corporate governance. Corporate governance refers to the system of rules, practices, and processes by which a company is directed and controlled. Publicly traded companies must meet certain governance standards and adhere to legal and regulatory requirements. Investor relations. Publicly traded companies must maintain good relationships with their investors and communicate effectively with them. This includes disclosing information about the company's financial performance, strategy, and risks. Post-IPO reporting. Reporting requirements. Public companies must meet a range of reporting requirements, including quarterly financial statements, annual reports, and various regulatory filings. These requirements ensure transparency and accountability to shareholders and the public. Role of auditors. Auditors play a crucial role in ensuring the accuracy and reliability of financial statements and providing assurance to stakeholders. They must be independent and objective in their assessments. Filing with regulatory bodies. Public companies must file various reports with regulatory bodies, such as the Securities and Exchange Commission (SEC), to ensure compliance with applicable laws and regulations. These filings can be complex and time-consuming and require collaboration with legal and accounting teams. Corporate governance. Role of the Board of Directors. The Board of Directors play a critical role in corporate governance, providing oversight and guidance to the management team and ensuring the company operates in the best interest of its shareholders and stakeholders. Responsibilities of management. Management is responsible for the day-to-day operations of the company and must ensure that the business is run in an ethical and responsible manner, in compliance with all applicable laws and regulations. Disclosure and transparency. Public companies must provide regular disclosure of financial and other information to shareholders and the public to ensure transparency and accountability. Investor relations. Communicating with shareholders. Effective communication with shareholders is a critical component of investor relations. It involves sharing important information with shareholders, such as financial results and company performance, and addressing their concerns and questions. Managing expectations. Investor relations also involves managing expectations, such as providing guidance on future earnings and growth prospects. This helps to build trust with investors and avoid surprises that can negatively impact the company's stock price. Responding to market conditions. Investor relations also involves responding to market conditions, such as changes in the economy and industry trends. This requires a proactive approach to keeping investors informed and engaged. Conclusion. Access to capital. Going public in London can provide access to a deep pool of capital and a range of sophisticated investors, allowing companies to raise funds for future investments and growth. Complex process. Going public in London is a complex process that requires careful planning and coordination to ensure success. Companies must be prepared to navigate the regulatory environment and meet the requirements of the stock exchange. Key steps and considerations. By understanding the key steps and considerations involved in going public in London, companies can navigate the process successfully and achieve their goals. These may include preparing financial statements, selecting advisors, and developing a communications plan. Thank you.